Joining us to discuss this issue further is financial expert Shabir Razvi. Shabir, thank you for joining us today. Now, is quantitative easing enough, in your opinion, to rescue the Eurozone's economy?
Hi, good afternoon. I think your sort of opening comments and the commentary, what we need to really understand is that we have to get this very clear, that the central bank does not create money. It's the commercial banks that do it. Understanding this point will illuminate the coming failure of QE as I see it. The central banks can only increase the monetary base from which commercial banks use to lend and thus create money. Like your previous commentator said that, having cheap money potentially could create inflation. However, what we have seen, and a number of people have said that, QE has done good in the USA and UK, but the reality is that the fact is that the QE does not work. Japan and the US have now proven this. And what's happening is that the investors are QE addicted. What that does is it provides cheap money for the stock market to go up, like it has been in the UK and USA. Property prices are increasing tremendously. We have a property bubble in UK because there's cheap money available, and really interest rate is at all-time low at 0.5%. How lower can it get? Could it? There's been some discussion by economists that it could go to even negative. What that means is that people leaving their money in the banks would have to pay money to the bank rather than receiving any interest on their deposit. So you have a deflationary situation happening in Japan. They have experienced it for the last 20-odd years. In UK, we are likely to get deflation, and certainly Eurozone has had its own deflation.
Shabir, we know that as well as mentioning the figure of 60 billion euros, Mr. Draghi also said that a commitment to hit the inflation target would be used. Now, is this likely to be open-ended?
It appears to be somewhat open-ended, but how far it can go? Because really, at the end of the day, the central bank in Europe, our own bank in the UK, and the Federal Reserve in USA, they've got no other instrument left in their power other than sort of creating cheap money through quantitative easing. So I don't think it will work, because what we have seen really for the last 7-8 years since the economic crisis, that growth has been negligible or virtually zero in whole of the Eurozone, plus also Europe, UK and USA. So we've got a huge problem. What I really do want to point out is that the tension between those who want big government and reduced role for government, i.e., government austerity measures and all that kind of thing, have dominated the political debate. However, the more worrying fissures are the disparities between the working poor, the unemployed, and those enjoying higher incomes and bigger profits. That's where this quantitative easing issue could have a great impact on the social fabric of Europe, and what we are seeing potentially with the elections in Greece in a couple of days' time, whether Greece will come out not of a Eurozone, but renegotiate the deal that they have been offered by the European Union. So you've got a whole host of challenges being faced by the Eurozone. So I think central bank just sort of printing more money and buying back the bonds is not the solution in either, certainly not in the long term, but even in the short to medium term, it may not be very effective.
Now, you've mentioned Greece, and that will no doubt be one of the countries most worst affected by quantitative easing. What should we expect to see there?
Well, as I said, the prospects of a government coming in power, which has said that it will renegotiate the deal with the European Union. What's happening is that in Europe, you've got a number of regions. You've got sort of, the periphery regions, which is the Mediterranean countries, Greece, Italy, Spain, and Portugal, which have had their problems hugely in the last 4 or 5 years, with unemployment being high and being pressurized by the central bank in Greece to reduce government jobs, austerity measures, and all these things have affected the people who are unable to either find employment, or if they do find employment, the benefits in the form of salaries, pensions, and so on, have been cut drastically. So that will create social tensions, as I said earlier. So with the Greece situation, it would be really quite fascinating to see how Mr. Draghi and his team would handle the situation, because the Greek sovereign bonds are what are defined as junk bonds. They have no value at all insofar as the quantitative easing is concerned. And a similar situation is happening, as I said, in most of the Mediterranean countries.
Thank you, Shabir Razvi, financial expert. Thank you very much for joining us today.